Return on Investment by myself, Michael Stevens. So one of the first questions that we want to answer with this presentation is what exactly is return on investment? Return on investment, or ROI, is a performance measure used to evaluate the efficiency of any investment or compare the efficiency of a number of different investments. ROI tries to directly measure the amount of return on a particular investment relative to the investment's cost. In order to calculate ROI, the benefit or the return on investment is divided by the cost of the investment. The result is expressed as a percentage or ratio, Chen 2020. And we'll get into how to calculate ROI as we move forward. Most businesses make decisions based on how it will impact their bottom line. Especially they want to know if what they decide to pursue will increase revenue or decrease expenses, thus resulting in a net positive return on the investment. In the information age, skills and knowledge are required to perform professional jobs that are changing rapidly. Proactive upskilling and retaining of people are critical. Companies are spending billions of dollars each year to develop courses, train their existing workforce, and onboard new hires. Many companies resort to mass training, the majority being inefficient, web-based, and costly instructor-led training, with some companies innovating in teaching and learning analytics to increase return on investment for many diverse learning and training interventions. So return on investment, what you're looking at here is the formula. Return on investment measures the benefit an investor will receive in relation to their investment cost. So the return on investment equals the net income divided by the cost of investment. How do you record ROI in e-learning and in training events? With this ROI calculation, the cost of developing and rolling out training is measured against the value or benefits occurred, providing a financial justification for the investment. To consider an e-learning project successful, you should be able to demonstrate that the benefits outweigh the investment itself. So how do you understand, or how do you even know when your project or whatever you're developing is successful? You're looking at ROI and you don't know what measures to take. So the first step, you have to define what success is. What do you want out of the training? Do you want higher scores, better assessments, or more data? Identify these specific goals so you can easily identify when you've reached your benchmark for success. So you have to first kind of define what it is you're defining as a successful ROI calculation. That way you understand what goals you have to reach. Since sometimes these things may not just be numbers per se, like if you were doing this kind of calculation, but you were basing it off how many production hours a company needed, if the clients were purchasing things or something like that. A lot of times these things are just goals. So you have to define what the goals are in relation to what a number would be in another formula. Step number two, choose which metrics you'll need to ascertain the success of your training. Standard metrics can be applied to the quality, performance, and effectiveness of your learning programs, as well as performance trends and predicted cost-benefit ratios. And step three, your learning and development ROI will be equal to the change in profits related to training divided by the cost of training, or ROI equals change in training related profits and cost of training. To really help understand the ROI, we have to kind of touch on the Kirkpatrick model. Kirkpatrick model offers educators a straightforward basis for evaluation of interventions, but that, as with any model, the approach to evaluation should be adapted to the particular setting and circumstances. The Kirkpatrick model, which was developed by Donald Kirkpatrick in 1955, is one of the most commonly used methods to evaluate the effectiveness of learning solutions. The model is composed of 4 levels: reaction, learning, behavior, and results. As it pertains to what we're looking at, they also added an extra level, which is the 5th level, which we'll cover here. You can see the diagram below. It's a general overview of what this model entails and at which stage it is tied to organization's ROI. The point here is that Kirkpatrick emphasizes 5 different evaluation methods to help you understand the goals that you've met in your ROI calculations. Instructional designers need to put in extra work to find ways to capture the additional evaluation levels for their programs, as that is how organizations can determine the real impact of, if we're using the example of online training programs. E-learning ROI is a financial calculation used to assess the monetary benefits of delivering online training programs. So as you can see from the chart, you have level 1, which is the reaction level. Level 2 is learning level. Level 3 is behavioral changes. Level 4 is business impact. Then level 5 is the ROI, normally calculated by converting the business impact gains. And listed here are my references. Thank you.